Hello everyone. Now, I've got something to say to you and it's important to me. And what I've got to say to you is thank you. Thank you. Because last week I did a video on the 2 hour time frame and a trade that I took on the 2 hour time frame. And it got me thinking. And when the Dow was about to open today, it got me thinking about just having a look at the longer time frames. I normally will look at the daily time frame and see what's going on there just to be aware of it. And I'll have a quick glance at the longer time frames to see where the EMAs are in relation to where price is at the moment, just in case there is a danger that I take a trade into where price is moving into the EMAs on the longer time frame, and that causes some disturbance, significant disturbance in price on the shorter time frames. So I'll do that normally, but I won't normally take a trade on the US Open based on the longer time frames, but I did today. And the reason that I did today is because doing the video last week made me think about it and made me aware of it, and there was a trade set up on the open and I made 350 points. Get that, it's one of my best trades of all time. 350 points, so thank you very much. I'm going to describe the trade to you now so you can see it. Have a look at these longer time frames. You know, sometimes the Dow Open is very, very volatile. And normally that's when the price is in a channel, it's in a trading range, something like that. And it wasn't today, so you need to watch out for that. I don't normally trade in trading ranges and I don't normally trade breakouts. And this wasn't a breakout trade. This was a trend continuation trade, and it used the momentum that is gained at the open. And you know, it's there's far more trades taken in the first few minutes of any trading session than there are in the rest of the session, because you've got the brokers placing the trades that the customers have made overnight when the market has been closed. So they place the orders where they feel there's a good price at the beginning of the day, and that creates high volatility to start the day. And there was high volatility today, and it all went in my favor, and I want to say thank you for that. So I'm going to describe the trade for you now. Right, so here we've got the charts from the open on the US markets today, and we've got the 2 hour chart here and we've got the 30-minute chart here. This, you know, this goes right back to last Wednesday on the 2 hour chart, and this was the opening 2 hour bar today, and this translates on the 30-minute chart as this was the opening bar. So went slightly green, went red, and straight down basically, based on the 30-minute chart anyway. If you look at a lower time frame chart, it was, you know, there were green bars in there as well as red bars, but for the whole period of 30 minutes, that was the bar there. So let's just have a look and see why I took this trade. Okay, so last Wednesday, big red bar, and the market started going down, and this is a downtrend. The market keeps going back to the river of value, the EMAs here, and then dropping down. Nearly went through there and then went down again, and it's done the same this afternoon. It went up early morning today in Europe, in the UK, early morning, and then basically the markets have been bearish today. And before the US market opened, this red bar was the last 2 hour bar to appear, and it was going down from the river of value. So as you know from watching my videos, I wait for the market in this situation to go up to the river of value and then take a trade down. Now, this was a perfect setup, and it didn't take place at 2:30 UK time. It took place at 2 o'clock. So it opened at 2 o'clock, and then at 2:30 you can see it started going down. So it opened, went up slightly, and you can see this translates into what happened here. So at 2 o'clock the market went up, came down, and it left, it left what we call a pin bar. It's a very bearish bar. It's got connection with the EMAs, the ATMA here. It's got a connection with that, and then you can expect there, this is my trademark trade, went green. As soon as it went red, you've got somewhere to place your stop up here above the high of the bar, and you can basically place a physical stop in there and see what happens. This was always likely to be quite a big opening bar, and you can see the price here, 36,100. That was about the price that we got, and it went down. It went down for 2 bars, and then it produced a doji. And this doji bar is basically, that's an exit bar for me in a big downward move. 2 red bars that nearly closed on its low. I hung on and I got out at the close of this bar here. So that's 30 minutes, 1 hour, 1 hour and a half, and then because of this bar, this stop bar stops price goes back to the EMA, or at least tries to. Not quite made it up there yet. So that's a good time to exit right there on the close of that bar. Notice that these decisions are all made on the close of a bar. So, I made a decision here that as soon as I saw a bit of red, I was going short. Got a bit of red and we were short. Tiny stop, started off up here, and then you can bring it down here when you start getting a good reaction. And the reason it was above there was because that's the high of that bar, and it would have been about the middle of the EMAs at that particular time. So good place to place your stop. Market turns red and it never looked back really. Big break on the lower time frames. Let's just have a look on the 1 minute time frame and the 5 minute time frame. Okay, so this on the 5 minute time frame. Let me just go back on the 1 minute time frame. Back to the beginning. Here we go. So that was the 229 bar, so a little bit of green, red and in. So that would have been a trade anyway on the 1 minute time frame. That would have been a trade on the 5 minute time frame. There was a trade on the 30 minute time frame as well, and all was good. Now normally I'd have been in here on the 1 minute chart. I'd have been in here and I got probably 9 points worse, but I'd have been out straight away for a profit, and then I'd have been back in again there, back in again there, and back in again there, and I would have made less in total, and I would have had more trades with, I think the trade that I took had a very high probability to it. It had fantastic risk and reward as a ratio, and it was an ideal opportunity. So thank you very much for that opportunity. You can see the market came down, put in a little bit of green and then carried on down. So there were plenty of trades on every time frame here. The 5-minute time frame, just about a trade there. That was a solitary green bar after loads of red bars, and you normally get follow through when you get that up near the EMA and then down. That one went up to the EMA, started rejecting back down, but no trade based on the where the candle closed, and then the market started recovering slightly, and it's back down again now, and that was a trading opportunity there. You could see it went slightly green and then started going down. So there's logic to all of this. When you've got a good system, milk it, and only milk it when you have got all of your signals in place, and all of the signals were in place for a trade on the 30-minute chart right on the open today. Too good to miss. And whilst there are a lot of points to be made on these longer term charts, the price action remains the same, and therefore the opportunities are the same. And you can set, I didn't on this occasion set my profit target because that is a breakout. You can see the low here. Once it got past there, it was just shooting down, and so I didn't set a profit target because I might have taken profit here, 36,000 level, and then I wouldn't have got all of this. And so I didn't set a profit target. I just waited for the candles to close, and that was a good opportunity to take profits right there based on the doji bar. A long way from the EMAs, that. So it's a good exit point. So there's the entry, there's the exit. That was the rationale, down, long-term downtrend, up at the EMAs and rejecting down. Perfect. Hope you found that useful, my friends, and thank you ever so much once again. I'm indebted to you. All of those trades that I've taken with live trades where I've missed the entry because I'm talking to you guys, you repaid me today. So thanks ever so much. What comes around goes around, eh? I hope you're having a great trading week, and if you've got any questions, any comments, do let me know. If you want to work with me, give me a shout. Thanks ever so much for watching. Catch you on the next video. Bye for now.